Hello and welcome to our Friday edition of the Sharesify podcast. As always, I'm joined by James and Steve. How are we doing, guys?
All good, Ian.
Well, like everyone, Ian, I'm absolutely sweltering, and it just makes me feel a bit like the Wicked Witch of the West. I'm melting, I'm melting. Everyone's in the same boat, right?
But that's a shirt. That is a proper shirt, Steve. I'm very impressed.
I've got me melons out.
Yeah, get your melons out. Another crazy week in markets. You've got the Kospi down 6% today, and we talked about it on Wednesday. You might think it doesn't matter, but it really does because it's leading the US market now. It is almost a tech proxy, kind of tail wagging the dog. So the S&P has been down. No, rather, it hasn't been down. It's made no gains for 4 days, and that's the longest run since March. But we had Micron results midweek, Steve.
Yeah, I mean, they were outstanding results, and they absolutely smashed forecasts. And I think the key factor here was just how upbeat the commentary was, and that's what really captured the market's imagination. So the shares ended up, I don't know, was it 14, 15, 16% higher or something? It was an enormous jump. And I suppose what it really tells the markets is that actually the AI trade is still very much alive and well. And this is a massive bottleneck now. Memory chips are becoming a really big issue because we simply cannot manufacture the high level advanced memory chips to meet demand. So this is not something that's going to go away anytime soon. And some commentators have been talking about 2-3 years before the tightness in the memory market really eases up. So there's a long runway for memory chip manufacturing and the AI trade in theory.
Yeah, I mean, I did catch a couple of the comments from Micron. They were absolutely outstanding. They said they got 16 clients that they got order books of 100 billion.
Yeah, I mean, it's been one of the perceived risks about Micron is it has these very large clients. So concentration can be an issue. But at the end of the day, most of its clients, if not all of its clients, are just chucking lots and lots of money its way. Of course, there are, as you pointed out to me off camera, of course, the payoff for this is largely it's all of us. It's the consumer, because we're going to be asked to pay more for certain devices, and this has come through in waves. Apple recently announced price rises across their product range, and this was forerun. We ran a story about a week ago based on Tim Cook's comments about we can no longer swallow the cost of infrastructure, and so we're going to have to pass those costs on. We flagged this up a week ago, so it's not really a shock to us and listeners of this podcast. But ultimately, the market is suddenly realizing, Jesus, there's a huge follow through, and it's largely going to be felt by the consumer. So I mean, Dell's been talking about this for a long time, but their consumer market has been shrinking, and its corporate market, its data center market has been booming. So it's been able to offset those pressure points. Microsoft might be able to offset those pressure points to some degree as well. Samsung as well. Obviously, it's selling at very high margin, but it does sell lots of consumer electronics. So it's really a case of seeing who your end customers are. If it's a consumer, you like to start feeling the pinch.
Yeah. James, talking of consumer, over to you. A couple of good reports this week.
Yeah, these consumer stocks continue to sort of defy gravity almost, don't they? And given the noise around the consumer. So Halfords, they've gone and done it. The tyre seller with traction. Upgraded full year 27 profit guide. Garages seems to be the growth driver for this business, but management did sound a bit cautious on the outlook for big ticket spending. So let's not get too carried away. The other one that caught my eye was Moonpig. Now, when it came to market, it invited a bit of ridicule when it kind of talked up its credentials as a tech company, but it really does seem to have something special here. So it's better than expected. EBITDA for the year, 75 million in free cash flow, and launched another buyback. So that went down very well with the market. And I think those data assets really do seem to be a competitive advantage as they send out reminders to customers, etc.
Isn't it interesting that consumer stocks are doing well? And I noticed today, I say, a bit of a choppy market, but you got defensive stocks like Sainsbury's and Tesco's are among the leaders on the FTSE. Imperial Brands, Bats. There seems to be a shift among investors towards those. But the other thing I've noticed, I mean, we've noticed this week and we've talked about it already, this massive wave of M&A that's coming into the UK market. Another one yesterday with Advanced Medical Solutions. being taken. Now, they were in a bid situation a couple of months ago, and TA Associates, private equity firm, walked away. The shares dropped to £2. But now it's being another bid has stepped up, and they're going to pay 660 million for it. EasyJet, Castle Lake have come back with an improved bid offer. It's around £5 billion, and EasyJet have said, try again. They said, we're confident in our standalone business, but if you want to come back with a bit of an improved offer, we might have a little chat. But we got more consumer stocks next week, haven't we?
M&A is really interesting, I find. I mean, we've been talking about the discount on UK stocks for absolutely years, and there's always been this idea that that discount can narrow over time. And what we've seen actually is that M&A has come in and cherry picked some of the best quality assets off the UK market. So rather those quality assets lifting valuations, they've actually left the market to leave, lower quality assets on the market. So it's been a real problem, I think. There's still lots of high quality businesses in the UK. Halma's a great example. It's always had a really full rating. It's always been well respected by the market, and there's no sense of M&A going on there. But you can get really highly valued companies in the UK. But across the board, you're just seeing the best assets being cherry picked off, and that's the real challenge, I find.
Well, there's something like 40 deals on the table at the moment, and some of them are whopping. I mean, they say EasyJet's 5 billion, but Segro, US firm Prologis, has come in and is talking 12.7 billion for it. I've got to add all these up. I'll put something out next week on, the size of these deals and when they expire, etc., etc. But James, I was going to come to you and say more consumer names next week. You've got quite a few, haven't you?
Yeah, we've got Sainsbury's. You mentioned Sainsbury's got the Q1 update. A bit of a greater skew to general merchandise, I think, than Tesco. So, how's that Argos business holding up? And we've also got ABF's Q3 update now. Primark, big European exposure. What's the heat wave doing for clothing sales? If it's a little bit warm, it's nice. If it's scorching, it's not good. And we'll probably get a bit more detail around the Primark demerger as well. So, very interesting week ahead.
And Currys, I think, as well. Maybe an AGM trading update.
That's right. And then at the small cap end of the market, we've got Cake Box, which is egg-free cake, and Audio Hardware Group Focusrite. They're both putting up numbers, so we'll be all over those.
James, it'd be really interesting. I mean, just given what we've just been talking about in terms of memory chips going up, Currys will be a really interesting company to see if they're giving any sense that they're going to have to pass on prices to consumers. That could be a really good bellwether as to what extent that end of the consumer market can hold up.
Yeah, absolutely. Always a good read on kind of the technology cycle and the consumer. So yeah, very interesting update.
And Steve, bit of a dearth of tech, but you're looking at Nike next week.
Yeah, I mean, we've written a regular kind of look ahead to what's coming, the most interesting stocks that come in next week. That's on our website. Listeners, go and have a look at that. We've focused on Sainsbury, AB Foods, and Nike. It's been in transition for a little while now. It's got a relatively new CEO. James knows this story better than I do. But I mean, it'd be really interesting to look at again at guidance. It's not so much about the numbers announced. They're always going to be important, but it's more about the tone of the conversation, tone of the commentary. Are they sounding more upbeat? Do they sound like they're pushing on and finding success with their turnaround story, or are they starting to see struggles? We know they've had issues in China. We know the conflict in the Middle East has impacted them. So what kind of commentary noises would be making? I think that's probably going to set the tone in terms of their share price.
Yeah, absolutely. I mean, for me, I'm just all I'm hoping for is an England win of the weekend, because my little World Cup selection. Because another thing I've been looking at is every now and then I like to kind of keep an eye on what are the most shorted stocks in the market, and I noticed three of the names I picked out, Domino's, Greggs, and Ocado, are all on the naughty step. So I know the longer England stay in, the better it's going to be for these guys. But we'll see how that pans out. Anyway, on that note, we'll wish you a good weekend. And say, if you've enjoyed this podcast, as always, please like and follow. And if you've got questions for us, send them in to editorial@sharesify.com, because we're always happy to discuss what you guys want to talk about.
Absolutely. And Ian, before we go, very important, I think listeners are made aware, we have a new wealth and retirement show coming up in November. It's a live event. You can buy tickets for it on our website. There's loads of information there. It's a great chance to meet a whole range of investment trust fund managers. You really get a chance to hear their presentations, but go and speak to the people themselves, ask them your individual questions. So it's a really good opportunity. So look out for that. That's coming in early November. All the details are on our events page on the website. So until next time, have a good weekend. Come on, England, and we'll see you next week. Take care, guys.
Cheers, Steve.
There we go.